When traders use indicators like Bollinger Bands and MACD in isolation, they often end up getting false signals or entering too early. But what if you could combine them, not randomly, but with intent to filter noise and confirm momentum, and MACD together to create a more intelligent, confident entry strategy, especially in volatile Forex pairs like GBP, JPY, or your USD? In this video, I'll show you exactly how to use Bollinger Bands. Let's break it down. First, understand the core role of each tool. Bollinger Bands measure volatility, expand when price action gets wild, and contract when the market consolidates. But they also help identify min reversion points, price moving too far from its average and likely to snap back. It shows the relationship between two moving averages and helps spot trend direction and strength, especially with the signal line cross or histogram divergence. MACD, on the other hand, is a momentum indicator. Now, here's where it gets strategic. If price breaks the upper band and MACD is crossing above the signal line with an expanding histogram, that's a real breakout, backed by momentum. Tip 1. Avoid using Bollinger Bands alone to trade breakouts. But direction isn't clear yet. Traders often guess. That's where MACD gives you the edge. The breakout is likely to fail, and you're chasing the top. But often it's a trap, especially if there's no volume or momentum behind the move. Many beginners see price touching the upper band and assume it's a breakout. A lot of traders buy right away, but that can be dangerous if there's no reversal signal. Now, the lower band touch has context. It's not just an oversold condition. It's momentum fading. That's where MACD comes in. But if MACD is flat or diverging, so combine Bollinger Band breakout signals with MACD momentum confirmation to separate real trades from fakes. Then drop to the 15-minute chart and use MACD to time the breakout entry. Multi-time frame alignment adds precision. Tip 2. Use the Bollinger Band squeeze plus MACD signal for trend initiation. If it turns downward and histogram bars deepen below zero, you prepare for a bearish breakout. Bollinger Band squeeze. When the bands get tight, signals that a big move is coming. If MACD starts turning upward during a squeeze and crosses the signal line, it often leads to a powerful bullish breakout. The squeeze gives you the timing, MACD gives you the direction, and you want a clear system that aligns volatility with momentum. Join Innohedge today. Tip 3. Catch reversals at the edges, but wait for MACD divergence. Let's say price touches the lower Bollinger Band and starts to bounce. Here's the smarter approach. Check MACD. If price is making lower lows but MACD is making higher lows, bullish divergence. That's your cue. Same goes for the upper band. If price makes new highs but MACD fails to follow, you're looking at a potential bearish reversal. This kind of divergent filtered band trading is what separates calculated entries from emotional ones. Bonus strategy. Combine the tools on different time frames on the H4 chart. Wait for a Bollinger Band squeeze. At Innohedge, we focus on combining tools like this, not just because they look good on charts, but because they're statistically proven to work better together. We don't chase candles. We confirm direction, then execute. That's how smarter trades are built. So if you're tired of relying on single indicator strategies that leave you guessing, we'll help you trade with confidence, logic, and clarity. No more random entries, no more fear. Click the link in the description to get started with Innohedge now.